Welcome back to the channel. So I'm back again with another decentralized platform. Today I'm talking about Premia DeFi options. So this is an automated options market that brings peer-to-pool trading and capital efficiency to DeFi options. I'm going to get into a full breakdown of what this platform is all about and what it has to offer. So stay tuned. Don't forget to like and subscribe to the channel. Let's get it on. So to put it simply, Premia is a decentralized options marketplace which actually operates via a domain, Premia.finance, that is owned by DeFi, DEFY, Network Services Limited, which is registered in Cyprus. So the front end to this decentralized Premia ecosystem that DeFi controls is actually separate completely from the smart contracts that are executed on the platform, and the entity in essence has no control to update or alter any of the smart contracts that you might interact with on the platform. So as an automated market options platform, Premia offers these decentralized options based on a pool-to-peer architecture to the market, kind of how Uniswap and SushiSwap work, but of course within a specific focus on options. And I've done some previous videos previously just touching on options trading. So if you want to learn more about that, you can always just go back to a couple of videos and you'll be able to see that. But Premia itself offers this collection of DeFi smart contracts on the Ethereum blockchain, and these are utilized for the delivery of financial instruments as a service to users. So what makes Premia very innovative is the fact that it introduces a liquidity sensitive pricing model with inbuilt market adjustment mechanisms as well put in place. So initially, they looked at delivering functionality that makes it possible for users to underwrite financial contracts that are traditionally referred to as American style or physically settled covered call or put options. Okay, so what distinguishes that from a Premia's offering is exactly the fact that Premia actually focuses on providing American options which can be exercised at any time before expiration, as opposed to European options that can only be exercised at expiration. So one could suppose that the increased opportunity that this offers is why they are more desired by traders than say European options. So effectively, Premia options minter can simply write options contracts for any token that is denominated in DAI, ETH, or REP BTC. So the Premia ecosystem and platform is also powered by the Premia token, so that's PREMIA token, which is the native ecosystem token that makes it possible for users to stake it and also to earn rewards. Allow me to explain what Premia options are and how they actually work. So they offer you as a holder the right, but not the obligation, to buy or sell an underlying token at a specified date. So the options are ERC1155 tokens, so that's ERC115 tokens, which Premia actually chose to utilize for a securitization of these covered contracts, okay, these options contracts. So this means that the token collateral is effectively locked up with a smart contract until either early cancellation, exercise, or expiration. That's if they're not sold. So essentially, the Premia options minter was devised in a way that is meant to be able to write options for any token denominated in either DAI or REPT, ETH or REPT BTC. So the ERC1155 token standard is conventionally used for transferable and fungible artworks so for example, in-game assets, because it facilitates single smart contract minting of several tokens with different degrees of specification. So it also allows for many unique tokens such as options to be created for the same contract or the same smart contract, which also makes it possible for each contract to then hold unique parameters or identifications that are specifically tailored to the distinct options contracts. So what makes Premia interesting is also the fact that they represent the same number of tokens, unlike traditional stock option contracts that usually represent 100 shares of the underlying stock. So for instance, if you think about it, a 100 ETH call option essentially represents the right to purchase 100 ETH at the option's strike price and by the option's maturity date. Every option comes with a token pay, for example, ETH and DAI, then an option type that is either a call or put in this instance, and then a strike price, which is generally the price at which the option can actually be exercised. So this also comes with a maturity date, which represents the expiration of the actual date of the option. So in order for you to actually use Premia, you just need to connect your Web3 wallet or your MetaMask. And then once your wallet is connected, you can then choose to proceed to buy the native token Premia. So you can do that, and then you can then swap or confirm once you receive your Premia tokens. And then, as you can actually see, or for the purpose of demonstrating here, that in this actual purchase that we did, I made the transaction on Ethereum mainnet via Uniswap. However, Premia has actually more TVL on Arbitrum as well. So this is all you need to pretty much know in order to sort of be able to get and check out Premia and just see what's going on under the hood. But I will also give you some more information. Just stay tuned. For those of you who are just interested in knowing why options or the options market is very important to the maturity of DeFi, so options are typically actually used for hedging risk, which one can look at as purchasing insurance against the downside risk of tokens they already own via put options, or hedging on the upside of risks they do not already own via call options. Okay, so as a result, buyers of call options can pretty much be said to believe that the underlying token could go up in price over time. And on the other hand, you've got put options, which are essentially options that give you as an owner an option to write or a right to sell a set amount of underlying tokens at a strike price that is specified. So this has to actually take place by the options maturity date as well. So in that case, you can actually also say that the buyer of put options generally believes that the underlying token will go down in price over time. So Premia uses or users are able to actually purchase American style options on Premia's automated market maker by simply selecting the details of the option that they would like to trade. For example, the token pairs, the strike price itself, and the maturity. Upon entering, obviously, those details, the user will be sort of typically able to receive a quote that is denoted in terms of the underlying asset for the call options, or indeed the base asset for the put options. Once, as a user, you agree with that price, then you'll be able to execute the transaction in order for you to facilitate the trade and actually purchase the option for that specific quoted price. So the relative supply versus demand of capital in a pool that a user requests from a quote is automatically also priced by the underlying option dynamics themselves. And on Premia, each asset pair typically comes with the pools, that is a call and an option and a put pool. And this makes it easier for both liquidity providers to choose which pool they'll prefer to underwrite. So it also means that it makes it easier for the option buyers to choose which direction they'd like to take a trade. This is sort of seen as a win-win situation, right? So wherever a user decides to buy an option from the pool, or when they decide to do that, they're able to effectively send the details of the option and that they would like to purchase to the pool, and then the pool will return a quoted price for the user's selected size, strike price, and also the maturity date. So in the case that a user is in agreement with the price, then they're able to execute the trade with an on-chain transaction. This means that also that the option will be at that point be owned by that purchaser, and it would be represented as an ERC-115 token in their wallet. So this also makes it possible for the user to transfer the option and also be able to exercise it in the future if they do wish to do that. So as far as exercising and settlements on Premia, in order for you to actually minimize the amount of funds that you need to change hands, Premia actually uses fully collateralized options at any given time. If the price of the underlying asset is lower than the break-even price at the time of that exercise, then that put option is pretty much considered in the money. And this generally implies that the user is effectively entitled to the payoff, which is calculated by subtracting the spot price from the strike price of the actual underlying. So this difference is also calculated automatically, and then it's settled in cash. That is the base token to the option buyer. So in the case that the purchases or the user purchases actually an option, that they're able to exercise that option at any time after the initial purchase. The advantage with the options is that they can also be exercised in full or in partial amounts over a set period of time. If an option is in the money, the payoff is automatically locked in for the owner of that particular option to be able to, at their convenience, and also after maturity, be able to actually exercise that option with no penalty. So what makes Premia DeFi options platform very unique to me is the fact that, you know, they provide a number of solutions to problems that other protocols haven't yet brought to the decentralized finance markets. Okay, so this means also that they're looking at market-driven options pricing, optimal liquidity pool utilization, and also pool-to-pool or pool-to-peer architecture, rather, that is capital efficient, and a platform that also offers you instant withdrawals with some risk management features for those liquidity providers. So it has sort of pioneered a market-driven options pricing and liquidity-sensitive return sort of ecosystem for liquidity providers, and it also has at the forefront of it, you know, when it comes to offering returns on liquidity options, premiums that are priced accordingly to the supply and the demand of the capital that is actually available in each of those pools. So this actually means that a larger demand also does in the end translate to higher options prices, which consequently also boost those returns for liquidity providers. So what's even better is that the liquidity providers also have control over which markets that they underwrite, and this is unlike underwriting the entire volatility market, since liquidity providers are able to then implement tailored strategies to sort of granularly provision their liquidity to the exact pools and also the options that they want to. So this is due to the automated pool pricing mechanism that Premia has, and Premia actually incentivizes liquidity providers to enter a pool from the time that it's launched in order to stand a greater chance of also earning the highest returns. This helps to also lower slippage, and when the time comes for the options to be purchased from the pool, everything will be all good. So as far as the token, like I said, it has a whole bunch of dynamics as far as the rewards that it provides, or it is meant to provide to liquidity providers. It is also used by stakers who are able to accrue Premia tokens over time through the liquidity mining program and the Premia system. So the amount that is actually rewarded tends to be spent, or depends actually on the size of the position and the length of the deposit, subject also to the amount of the protocol fees that are generated. So users of Premia should be able to buy options with any asset as long as there's liquidity available on the DEX. And if a user decides to purchase an option with an asset that is different from the default payment system or token that they're using, the asset will be swapped to that token and on the DEX, and also the price will be the best price that you know, you can be given before the option is actually purchased, and it's done simultaneously and seamlessly actually in a single transaction, so that, you know, you have that low slippage and a good user experience. So capital and liquidity as well in the pools for trading options is actually provided by these liquidity providers, such that when a trader purchases an option, the liquidity provider actually simultaneously underwrites the option to the buyer. It is important to note that also all options on Premia are fully collateralized and can be exercised at any time before or after the option's expiration as well. So once an option also expires, its value is then locked into the option's value at the time of that expiration. When an option is exercised, the exercise reward is then also sent to the options holder. Subsequently, the remaining collateral is then sent back to the liquidity provider's free capital pool, which makes it available to be used once you know, there's things that need to be underwritten as well for future options, and in some instances also to be withdrawn by depositors together with the premiums that they would have earned from selling the options. So liquidity providers on Premia have the actual opportunity to take advantage of market competitive yields from options premiums, in addition to Premia rewards from the liquidity mining program as well. So that's all done in order to make it possible for traders as well to have the best possible prices, and also the optimum trading experience to ensure that the volumes and returns for liquidity providers and the Premia stakers are also sustainable. Nonetheless, it's important to know that Premia is currently available in beta, and it's important to understand also the risks before you dive and use this type of platform. So let me know what you guys think. Go check out Premia, and if you want, you can also check out the full review on our main site, Decentralized News. Don't forget to check out the links in the description to my books, Tokenized Trillions and Blockchain Applied, and also to like, share, and subscribe. Turn on the notification. I will see you guys in the next video. Peace and love.